All right, so today we're going to be breaking down the crypto tax initiative that has been really at the forefront of a lot of news in the last couple of weeks. And of course, you guys as investors and people in the market, both from the blockchain community and out there, we thought, hey, let's get some people on that really understand where this is going. My name is Paul Barron. Welcome back to TechPath. Let's jump into it today with Congressman Emmer, who's coming out of the 6th District in Minnesota. Great to have you on the show.
Thanks for having me, Paul.
All right, so Congressman Emmer, thank you so much for stopping in today. We want to just jump right into it. Let's get into a little bit about the infrastructure bill and kind of the core language that really affects the crypto market in its whole, kind of what you guys are going to be doing to try to address this issue next week.
Right. Well, listen, this bipartisan infrastructure bill came over. Very sad to me, Paul, that our government and quite frankly, a combination of senators decided they wanted to fund some exorbitant spending on the backs of crypto innovators. You want innovation in this space. We know we've had experience as the medical device tax under the Obamacare legislation. You want to tax innovation, you're going to get less of it. And the problem is the Portman Amendment showed a certain ignorance as to what's involved with money, or I should say, crypto entities that do not have custodian, they don't hold crypto, right? So what this does, it would expand the tax code's definition of broker to include non-custodial blockchain entities. The examples would be miners, software developers, people
Right.
like that. And it would require them, Paul, to collect know your customer information. Now, I don't know where they got the number. They say this expansion, it's way too big. And by the way, I'll get to it in a second. It also misunderstands who they're working with. Someone came up with the idea that this will bring in $28 billion. Whether you agree with finding new revenue sources or not, keep in mind, non-custodial crypto entities do not have customers. And Paul, if they don't have customers, they're not going to have information to supply the know your customer requirements of our government.
Right.
By the way, if you required them to go out and get it, because they're not in the business of safeguarding customer information, you can have some serious privacy implications. So this provision that was added to the infrastructure bill in the Senate by Senator Portman reflects a severe misunderstanding of custody with respect to decentralized technology like crypto on the blockchain platform. By the way, can I add one more thing, Paul?
Yeah, go ahead.
I also am troubled by the fact that Congress wants to cross-jurisdictionally try to pay for an infrastructure bill on the backs of our crypto industry through legislation that, quite frankly, was slapped together with little to no consideration for the crypto industry.
Yeah, and I think, Congressman Emmers, when you look at kind of where the market is right now, the U.S. obviously is in a very, I think, a great opportunistic time frame right now, especially around development, blockchain companies developing in all sorts of areas. This isn't just necessarily about a cryptocurrency. You've got China, who has basically stepped away from cryptocurrency into the digital yuan. This really kind of opens up an opportunity for the U.S. to become a global leader in blockchain technology as it really kind of reformats Web 3.0. Do you feel like today's leaders there and lawmakers really understand what's at stake?
No, I don't. Do I think some of them do? Yeah, I do. But I think you got to look, Paul, to the House with the Blockchain Caucus, which is really the go-to bipartisan vehicle to tackle this problem. Because, whether it's myself, Warren Davidson, Patrick McHenry on the Republican side, or it's Darren Soto, Bill Foster, Ro Khanna on the Dem side, you have a consensus that's exactly what we risk here. We risk pushing this innovation off the shores of the United States and sending them somewhere else. And by the way, it's interesting that you bring up China and the digital yuan, because that's actually what Chair Powell is proposing. He's proposing a central bank digital currency that, frankly, would be like the digital yuan in China. Since when did the United States of America, Paul, want to emulate the Communist Party of China? I think we've got a lot of work to do. And I'll go back to your first question. What are we going to do? I really wish this amendment had never been included. I think it was misguided. I think it was not thought through. I think the Cruz amendment that would have eliminated it was probably the way to go. And especially since they said that that bill was paid for, it's certainly not paid for. They were desperate to try and grasp revenue from any mythical sources they could. My humble opinion, I can be proved wrong, but I don't see it right now. Now it's over with us. We're being told that we're probably not going to get a chance to amend this bill. But look, the Blockchain Caucus, again, with Republicans and Democrats, it's building a bipartisan coalition of House members with the correct support that can get Nancy Pelosi's attention to at least consider an amendment process. And, you know, like I said, I would like to have seen it never included, but now that it has, you know, we've got to deal with it and ironing out what an amendment or a standalone text might look like. We're gonna have to have that discussion as Republicans and Democrats. Each amendment obviously is not perfect, but seeking perfection might make it impossible to get the correct support to squash this thing. And I think that's really the next step, is as a coalition of Republicans and Democrats who do understand how important this is for innovation, for the development of wealth here in the United States of America, for opportunity for people to have access to things like the financial services industry. And like you said, Paul, perhaps even more importantly, this technology goes well beyond crypto.
Right.
We got to make sure that government does not throw the wet blanket on top of this innovation and allow it to grow.
When you look at, all right, so the bipartisan movement that we've seen around the caucus for cryptocurrency and blockchain and the organization you guys have put into place, do you feel like there are any particular areas of the government that seem to be less understanding than others that, you know, some of our viewers and the crypto industry could reach out to, whether it's to their House reps or their senators and their congressmen? Where do you think is the best for the industry to start reaching out, and where do you think the stopgap is? Do you feel like it's going to be at Speaker Pelosi, or do you feel like it's going to be somewhere down the line?
No, I think on this one, it's probably Speaker Pelosi. It's whether or not she'll give us the opportunity to make some important changes to this. And, you know, you talk about questions about the people in our government. First, I would tell anybody watching this, you do need to educate your representative, your senators. And granted, they're going to have a lot on their mind, right? You got inflation at 5%. You got these issues of crime across the country and defund the police. You got the border. Now you got Afghanistan. Yes, they will have other things on their plate that they're dealing with. But this is significant, Paul. And if you think someone else is going to do this for you, think again. You really need to lean in, find the number. If you need help, contact my office. We'll put you in touch. But think about this for a second. Regulatory ignorance is already driving crypto opportunities overseas.
Right.
You know, they like to say that crypto is an emerging technology. Paul, crypto has already emerged. You got 50 million Americans who already are invested in cryptocurrencies. The regulators are like fighting with each other. They all seem to want jurisdiction over the industry, but they haven't educated themselves enough to understand crypto, blockchain, and the idea of decentralization. I mean, you look at Janet Yellen, for instance. She lobbied, or her office, the Treasury lobbied Portman's office for the provision that would put reporting requirements on crypto entities that simply could not comply, like miners, which we talked about earlier. That just shows a complete ignorance of what they're doing with. Gary Gensler at the SEC, he wants to regulate crypto to the full extent of his authority, and then he wants Congress to grant him even more authority. That doesn't bode well for innovation in the future. And Michael Hsu at the OCC, he wants to reevaluate the Fintech charters on a case-by-case basis. Remember the great work that Brian Brooks was doing in this space just a few months ago. I got to tell you, the OCC should never pick winners and losers. And, you know, if you look at what Hsu's already done, they rolled back the true lender rule. So, and by the way, let's not forget Jay Powell, who I mentioned already. I mean, he believes that if Fed crafts a central bank digital currency, there wouldn't be a need for crypto or stable coins. And frankly, that's his main argument in favor of crafting a CBDC. Right. So, Paul, now is the time to stand up, speak up and be heard. And you're going to help us because I gave you half a dozen names, Republicans, Democrats, and the blockchain caucus in the House. You can certainly plug into the blockchain caucus, and I know that our people will direct you to your representative and or your senators, but now is the time, especially with the representatives. You need to weigh in.
Okay, Congressman Emmer, when you look at where the SEC's position is right now, obviously they're in a bit of a fight with a known crypto entity out there, XRP. They've been in this battle for quite some time, and we are seeing some issues in terms of trying to legislate this from a standpoint of really whether or not cryptocurrencies, are securities, still yet to be determined. Understand that we do need regulation. I think a lot of the industry would totally agree with that, but obviously they're looking for the right regulation. Do you think the SEC is the entity to be in charge of how to govern and kind of secure how crypto and blockchain is going to move forward?
Well, look, we've got to give them direction. So first off, I'm going to just show you, Paul, I have a bias when it comes to our regulators. They're not elected. Granted, I'm not trying to denigrate them because these are smart people. They've got good careers, but I'm the guy who has an election certificate, not them. And the idea that they jump into an area that they're not very familiar with, again, their ignorance is pushing innovation overseas. Right. I've offered a bill, which maybe what you're referring to, but I offered it with Darren Soto and Ro Khanna back in July. It's called the Securities Clarity Act, and it would distinguish digital assets from the securities contract they may or may not have been a part of at one point. And it does this by amending the securities law to include a new definition, investment contract asset. Give you an example, tokens would be investment contract assets. Why did we do this? Because the SEC, as you pointed out, tends to be regulating by enforcement action, which ultimately kills innovation and pushes opportunities out of our country. So this bill would actually provide the SEC with a framework to determine when a token is offered as part of a securities contract and when a token is not. And if it's not part of a securities contract, Paul, it should not be regulated by Gary Gensler and the SEC. Under this, entrepreneurs, I think, would have the opportunity or would have the securities clarity that they need to innovate in our country, which obviously would expand access and opportunity for all Americans when it comes to capital formation opportunities, employment opportunities, and other entrepreneurial opportunities. And what we did, because I'm going to bet that your listeners are very educated when it comes to this, the long-time test that determines whether or not something qualifies as a security or not involved an orange grove, and it was the Howey test that our court created many years ago. Before, by the way, we had this innovation. So basically, what we've done, or what we're proposing to do, is update the Howey test, update the regulations that are out there with this investment contract asset, so that people, it will mirror what's happening in society. And there are some other ideas out there, Paul, but I would suggest the reason that this one is the way to go is because the marketplace is moving so fast, right? I mean, the innovation that is happening, you got to be flexible enough. And if we're going to do what Congress is supposed to do, we should be putting policies in place that allow for the innovation and just create some soft touch or some guardrails so the government can perform its function.
Yeah. So you mentioned the Securities Clarity Act. Also, you guys are basically promoting a safe harbor for taxpayers with Forked Assets Act. And then you've also got the Blockchain Regulatory Certainty Act. How do those all play in, and whether or not those can actually make it through the House and into the Senate?
Well, I mean, the Blockchain Regulatory Certainty Act, I'll go with the last one you mentioned, that actually fits into our discussion about the Portman Amendment that was included in the infrastructure bill.
Right.
Non-custodial entities are not money transmitters, and quite frankly, requiring miners and software developers to register as money transmitters in 53 jurisdictions just to do business in the United States, in my opinion, is the single most limiting regulation framework that hinders innovation and pushes opportunity overseas. So that's what that one's all about. The The other one is you don't want to get, it's almost like regulation through enforcement, right? You have a great idea, and it's the forked assets. For your listeners, it's like we know Dogecoin is a fork of Lucky Coin, right? Which is a form of
Right.
Litecoin, which is a form of Bitcoin. You might hold Bitcoin and you don't even know the next day when you got up that you now have Litecoin, right? So the idea is you can't have nonsensical or non-applicable tax rules and regulations. And this bill would protect taxpayers from being penalized until the IRS actually issues updated guidance on how to report forked cryptocurrency. It would create a safe harbor, and it would specify that the receipt of forked virtual currency does not constitute a taxable event. And that's what's incredibly important, because right now the IRS requires taxpayers to file taxes on the receipt of forked virtual currency. And again,
Right.
as I said at the outset, many taxpayers receive forks unknowingly and, quite frankly, often unwillingly. The hope is that the IRS will change its guidance to require Americans to pay taxes on their forked virtual currency at the moment of sale, not at the
Right.
moment of receipt, which I think is a lot more fair and just.
Well, and we've seen the IRS kind of back off a little bit, even after this legislation was passed, or has been passed on the infrastructure bill, in terms of being able to actually enforce this, because now the IRS has to go out and essentially try to work with companies, miners, program developers, all those kinds of companies that literally have no infrastructure in place to even answer the question of getting a customer's information. So I was just surprised that the IRS actually looked at this and said, how are we gonna even enforce this scenario that we've got in this infrastructure bill right now?
Well, remember, that's another problem with the infrastructure bill. You realize it doubles the size of the IRS. So
Yeah.
theoretically, it will have a whole army of Internal Revenue Service agents that will be out there trying to figure this out. But Paul, that's the problem, right? The reason this is so important is because we want the innovation to stay in this country. And it doesn't matter if it's the IRS when it comes to forked assets. It doesn't matter if it's the SEC, the Treasury, the FDIC, the CFTC, this alphabet soup of bureaucracies in Washington, D.C. Until we as elected leaders start to put guidelines in place, we're going to have this, cross-jurisdictional battle for who gets to do this. Because remember, some people may not be happy with me, but you know how a bureaucrat measures his or her success? How big is my budget and how many people are working under me? And that's
Right.
that's the issue here. If we allow this to happen, you're going to lose a great opportunity, as you mentioned early on in this interview, that the United States of America has been a leader, should be the leader, and there's no reason why we should put more obstacles in the way of innovation in this country.
Yeah, for sure. Okay, so Congressman, when you look at, you're navigating DC's landscape, you get a chance to work with lobby groups and, different entities, including special interest, et cetera. Lobby groups is one of the areas that crypto and blockchain have really been lacking in. And the likelihood of some lobbyists starting to move into DC to really move into this area in terms of a directive to help both lawmakers and just in general, I think what's happening in DC understand around what blockchain really means for Web 3.0. How would you see a new lobby group being formed in DC, and what would be the steps they need to take first?
Educate the members. And a lobbying group, look, the reason that people lobby government, in my opinion, there are two. One is to protect their existing bottom line. They don't want changes. They like the way things are working. Mm-hmm. The other is to try and lift the shackles that have been put in place to stop people from disrupting an existing marketplace and creating new opportunities. I'll give you an example. During the pandemic, there's been a long-standing fight over how you do telehealth, Paul. How you not only do it, we know you could treat at your home place out in rural Minnesota with a hospital that's 50 to 100 miles away. But then the question is, how does that provider get reimbursed? That was always the hangup. You got the pandemic that came in place. We had to make some serious adjustments, and we advanced probably 10 years overnight in terms of telehealth because people realized this is where the future is going. I think you're at about that same point when it comes to the opportunity that blockchain technology provides and decentralized currencies provide. I mean, we've seen some interesting experiences with the little guy and gal out there who are going to take on the big funds when it comes to securities and frankly bring them to their knees and tell them that we're out here. It's a new type of empowerment for all Americans. And you're going to run up against some existing fences that have been created by the current marketplace, which I think we've seen a little bit of so far. Maybe this tax could be part of it. Maybe it's Secretary Yellen lobbying Portman's office. But at the end of the day, I'm going to say it again. You got 50 million Americans, more than 50 million Americans are now invested in crypto. Paul, it ain't going away. You're going to have to deal with it.
Yeah.
This is a constituency that is going to continue to grow. And quite frankly, when our government continues to spend at outrageous amounts, when our government continues to float a currency and just print money, you're going to have a lot of people looking at other options as to how they maintain value and how they survive. And right now, our central banks, both here at home and around the world, they've been creating debt for about 40 years. And this idea that you're going to print another 3.5 trillion and add to this already incredible deficit, it's only going to spur more people into the crypto area environment. And we need to be prepared for it. We need to make sure it's here in the United States of America and that we don't do the things that'll push it out of here. That's the last thing we want.
Yeah, for sure. Do you think the lawmakers really understand the ecosystem in which, especially cryptocurrency, because essentially when you look at the demographic makeup of a crypto investor, in many cases, they're middle-class Americans. And they're
Right.
people that are trying to essentially grow their wealth. They're not the traditional institutional offices, the family offices, even though that is moving into the space now. But the realistic aspect is over the last 5 years, it's mostly been emerging, either young millennials trying to get a step up and or middle-class Americans who are investing. And now we've essentially kind of pulled the rug from those Americans in this essence of is eliminating what was the one thing that could possibly put them in a better wealth position. Do you think they understand that?
Not everybody. I think there are some. I mean, I told you earlier in this interview that the blockchain caucus in the House, I believe, is the go-to bipartisan team to tackle these issues. These are the people, Republicans and Democrats, who quite frankly have been leaning in to try and understand this more, understand how the innovation would benefit all Americans, right? I talked about access to our financial industry. I mean, keep in mind, you've got women in other cultures around the world who aren't given access to the financial services that are offered. When you got crypto and on the blockchain platform, they actually can get access. So your point is well taken. I think we've got a lot of work to do in a very short period of time. This is not a gentle slope up the hill. This is more of a 90-degree angle, which the Portman Amendment shows us. I mean, if we're going to pass stuff like that really doesn't take into account what you're doing, not just to the innovation in this space, but to the opportunity for all Americans and others around the world, you haven't done your homework.
Yeah, for
You
sure.
know, policy has consequences, Paul.
Yeah, absolutely. Congressman Emmer, great to have you on the show. Our community will jump behind this in a big way. And of course, now we understand kind of the landscape of where DC is moving. I think it's just getting that voice out there to the right people to help them understand really kind of what the industry is dealing with, but also what the potential here is for both blockchain technology and just in general cryptocurrencies, and really for the U.S. to pretty much lead the way. So it's been great having you on the show.
Thanks. It's been great being with you. And let them know, they should also let their representatives know it's going to happen with you or without you. It's going to happen here at home or it's going to happen somewhere else. We need it here at home.
Yeah, for sure. Excellent. Well, thanks again for stopping in. Guys, if you're listening in right here on the podcast right now, make sure and give us some likes over there. And of course, if you're here on YouTube, the best way that you can support the channel is basically subscribe and of course, give us some comments below. We'll make sure and provide some links to Congressman Emmer and of course the Blockchain Task Force and some of the people and also some of the projects in DC that are really moving in the crypto space to you. So of course, if you have any questions, you want to hit me up, just hit me up on Twitter @PaulBaron. We'll catch you next time right here on TechPath.